Good morning, guys. How are we all doing? Happy Friday, everybody. Welcome to Trading with Dan. I am Trading with Dan. This is our Bitcoin morning update. If you guys wouldn't mind smashing that like button, we shall go over to those Bitcoin 4-hour charts. So Bitcoin on the 4-hour, we had a nice pump up on the Fed. More specifically, Jerome Powell saying that the tapering and the rate rises are not obviously in autopilot. We're not watching paint dry. So basically, as we all know, the economy will deteriorate in the process of them removing liquidity, and at which point they'll just have to about course do a 180. So yeah, we all know that will be coming now. Well, to be honest, most of us, maybe some of us is a better word. Some of us knew that was going to happen anyway, but I think the market is slowly going to come around to the only way they can is the market's basically been only up. The only way they can they can address the Ponzi system is to put more liquidity into it, and the massive debts that are just held by everybody, personal, corporate, governments, and even central banks to a certain extent, that they can have debt owed to them. The only way that can be repaid is through inflation. It's just that they need to be a bit careful with how quickly they boil that frog, because at the moment they're doing it a little bit too quick, and the frogs are realizing what's going on. So there'll be a bit of jawboning to try and placate those frogs, whilst actually doing nothing about the rising temperature, and ultimately is going to end up in the same result. So anyway, enough of those analogies. Bitcoin looking pretty dire here, although we have got to well, we've got to be optimistic, haven't we? We've got to be positive. But yeah, Bitcoin looking dire. The bulls, this surely has to be, the bears, this surely has to be the bears' last chance. If they do not drop Bitcoin below this horizontal now, and take us down into the low 40s, then they are done for, and they are going to get squeezed all the way back up to 100k plus Bitcoin. Basically, this is their shot. This is their chance to do this. Do I personally think they'll be able to do it? I mean, at the end of the day, could just be a short-term trade for a week or so, even a few days. They break it below, we whip back above, and then continue on our merry way. So I can't really make a prediction as to whether we will or not, whilst we are literally sat at the level. But ultimately, do I think the bull market's over? No. Do I think we're going to continue upwards? Yes. But do we break this level? FOMO out, FOMO in a few more shorts. Well, not FOMO, obviously the opposite of FOMO out, some longs, basically get some longs to puke their positions before finding ourselves back above 47,000 and then onwards and upwards. That is often how markets can operate, but we shall see. We shall see. Maybe, like I said, the bears don't have the strength. We get back above 48. I mean, on the plus side of obviously having this rejection here, we just now have a lower high. We're looking at taking out this level to continue up. Now we are realistically only looking at this level that we had anyway. So we can reduce it down a bit, 49.5. But it's all there or thereabouts, isn't it? We are in a tight range, so there is not a massive dollar value difference between obviously this point and this point. So we could still realistically call it 50,000. Back above 50,000, then yeah, I think that will be it. We'll be onwards and upwards. Obviously, a lot of the problems that we're having, if we just come over to here, not a lot of the problems, but it was just this easing off in the stock market. Bitcoin is clearly, it has been in a bit of a downtrend, and it was printing a bearish formation, so it wasn't too hard for the bears to get us to reject at that downward sloping trend line, even off the back of what is quite a small move down in stocks in the S&P, but taking us below here and into this area is probably going to be a whole nother story. And I think they are the bears may be acutely aware that they could get squeezed at some point. All we need is basically these stocks to go back up today, and then yeah, that could pretty much be what we are looking at. We also do have another interesting interesting driver here. We have potentially that swing failure above, breaking out of this bull flag, this symmetrical pennant, whatever you want to call it, and then getting rejected and find ourselves back below this trend line, which is our macro, our larger time frame ascending broadening wedge, which is my friends, on the balance of probabilities, more often than not a bearish formation. And this swing failure above, 2 attempts to try and move above, swift rejection here, back with below this trend line. Realistically, we can be looking at this horizontal as a potential minimum target, I would say, which we could actually potentially, based on price action here, what we will do, we won't move it down, we'll actually make it a box. So we'll actually, this is a bit thick, so we'll put that to a thinner line. We'll extend this along. We will also then add basically the new one that we need, which is basically about here. The new one, and then we'll put a box, a grey area in here. So if we make it below this area, then I think we will be shooting straight down for the next area. Who would have thunk it? If we break this horizontal, we'll break down to the next one. Bear in mind, this is quite a long way away from price action at the moment, but we are looking at this larger formation here. So we do potentially have a nice move on the cards down towards the 90, well, basically the mid 94s. Which would be well, historically good for risk assets. I'm sure it would be good for risk assets going into the future also. So yeah, that will potentially be a head tailwind. And then if we do take this out, we end up looking at breaking down the macro formation of this ascending broadening wedge. And by macro, I just mean larger time frame formation. And then yeah, coming down further. And if you actually want to look at the actual macro, is basically this here, where we have obviously a pretty bearish looking formation, obviously, with wherever the highs were there, the lows, the lower highs, the lower lows, the lower highs, and looking to put in lower lows, which oh my gosh, could be pretty disastrous for the dollar. The only thing I would say is that this is the dollar relative to other currencies, and if we are going to have what is in theory a collapse, in inverted commas, of fiat currencies, you would actually kind of expect the dollar potentially to have a chance of being the strongest out of the fiat currencies. So this may not break down, this may break up as the dollar becomes useless and against real things. It may actually rise in value against other currencies, which this is the measure of, particularly the euro. But I mean, if you want to talk, this is obviously massively against the euro. If we do, I think it's actually about 60%, 60 odd percent. I thought it was about 40%. If we do want to talk about relative trades, we have got the euro zone and inflation Lagarde, or Madame Inflation, as the Germans like to call her, Christine Lagarde. Literally, like, you get swamp monsters and swamp creatures in the US political system. We get absolute fiends in the eurozone, because these guys they're not even voted in at any point anywhere. These guys are just like just absolute global elite Davos type people that just want to rule everything, want to chip and pin us on and all that cool stuff. Christine Lagarde's one of those. But basically, Christine Lagarde is saying we're practically never going to raise rates again. That is quite a long time. That sounds like peak dovishness to me. And then we have the Fed saying they're going to raise 3 times next year, 3 times after, and then they're basically doubling the speed of tapering. In my opinion, that sounds like peak hawkishness. So if we have literally peak hawkishness in the dollar and peak dovishness in the euro, that basically would indicate the top for me, which would then obviously indicate the top of the DXY, because that's basically the dollar against the euro. We don't actually look at this a lot, but let's literally look at the dollar against the euro, see how that is looking. Let's have a look at it. I mean, a pretty substantial move down. Is this, if we actually extend this along, is this an area we can pretty much rally from, potentially? Let's look at a daily, let's look at some higher time frames here. yeah, I mean, within the context of a tightening formation, this could be a level we could basically base from. Let's have a look at it on the weekly as well. Yeah, I mean, it is basically pretty much sideways, isn't it? We would kind of say, I mean, if we actually want to look at this, interestingly enough, we have a high, a low, a higher high, and then potentially putting in a higher low down here, at which case we could then run off to a higher low. Sorry, a higher high, which this would actually indicate the euro strengthening against the dollar, i.e. the dollar weakening, which is what I'm talking about, the dollar weakening relative to the euro. And this is obviously on a larger time frame scale, but yeah, I mean, we could be looking at a move up here. And yeah, I mean, that could basically equate to a move down in the dollar. So we shall have to see how this plays out. And we do know, obviously, we probably, there is a strong correlation between dollar weakness, albeit against other fiat currencies, and well, risk asset strength. What I will say is that a lot of the reason for it is that the dollar itself is a risk off play. It's a safe haven. Like, you move to cash. Cash is the world reserve currency is the dollar, so cash equals the dollar. So when you do get increasing risk, and then what happens is, like, the world's not doing so well, then you get basically money moving into the dollar, then you get dollar strength. So it's not like anything like the American economy is doing well, therefore the dollar's strong. It's just that people move into cash. The cash is the world reserve currency. Maybe it's losing that status. Maybe people will move into gold. Maybe they'll move into Bitcoin. Maybe they'll move into other things. But at present, the world reserve currency is the dollar. So in a risk-off environment, it's not that America is doing well. America could be doing economically worse, and it certainly can be with its debt burden relative to other countries, by virtue of having the world reserve currency and being able to do what it wants. Its economy can actually struggle more relative to other countries, and a lot of metrics that the US is one of the like a lot of like metrics or standards of living. The US is like one of the is a lot lower than other developed nations. But yeah, it's not, like I say, it's not a function of their economy being stronger than the rest of the world. It's just a function of just the world reserve currency status. Anyway, that we have spoken way too long about that. Ethereum Satoshi pairing. This is not the Ethereum Satoshi pairing. Yeah, I can say. We can see we had a nice pump up above this resistance. Currently finding ourselves back below it. So could this be a swing failure? Could this be a head and shoulders? It does look like one at the moment, and we are back below this resistance. So realistically, this needs to turn around and get moving. Otherwise, this could look like a pretty bearish formation. And if Ethereum Satoshi pairing is going to be bearish, it's generally bearish for crypto. If the Ethereum Satoshi pairing is bullish, that's generally good for crypto. In much the same way we measure the BTC Bitcoin dominance as a barometer of like health and risk of the crypto market. If it's coming down, we kind of see there's more, like, the crypto markets are probably going to do better, and there's more risk in more people taking risk, either more appetite for risk. So we do kind of need to see this turn back up, probably from the level we're at now. The USD pairing also did bounce its way off this level very nicely above this resistance of roughly 4,000, but obviously currently below it. So this does need to make a move as well. I mean, ultimately, we are just looking at, what we're looking at is stocks needing to bounce from here, not needing to take out this low, because then things will look temporarily bad. Ultimately, I think we'll continue upwards, but we will obviously have to digest some further downside price action in the interim. We're looking for that to go up, and then obviously Bitcoin to hold this level, even if we wick below, get bought back up, take out this 50-odd thousand level, and then yeah, continue on our merry way. Let's look at the stochastics. How are they looking? Are they going to help us out? 4 hours still downward pressure from there, clearly. I guess these 10 and 12 are going to turn back down, sadly, but yeah, we shall see. Yeah, 10 hour has turned back down here, 12 hour looking to turn back down, daily floundering around there, bi-daily looking to turn back down, 3-day looking to turn back down, 5 days still diving, weekly still diving, bi-weekly just about up, and monthly up as well. So the stochastic really is not good. I mean, we don't need to like do much other than look at this chart to see that it doesn't look that good. We are in a downward move and we are printing basically a bearish formation. So like I said, we need the stock markets to basically look good to basically drag us out of this hole. Otherwise, realistically, the Bears have got a shot, haven't they? They have had a shot. They have been trying for quite a while. So like I said, they may get exhausted and we may move back up. But like I have also been saying, we have this wider range here. We have this wider range here. We are currently in the top part of this wider range. We do really want to hold this top part, put in a lower high here. Higher low here and move onwards and upwards. But if we were to drop back down here, that can happen. We do then start to look like we could print a head and shoulders on this larger time frame, which would be pretty disastrous. But it isn't the end. We could still bounce from here, invalidate the head and shoulders, then continue up. But I think there is just a lot of indecision. Also, we just have to remember the time of year it is. We are moving into year end. If you're currently sat on crypto losses here from whenever you got in, and you're potentially have like stock market gains, you have gains in other assets or other parts of your portfolio. Obviously stock markets aren't really down much from the high, so a lot of people are still in a lot of profit from stocks. You could literally just look to close out your crypto position at a loss, offset that loss against your gains for tax purposes, and then rebuy come January, come start of next year, basically, which is less than 2 weeks away, isn't it, basically? So there could be that element there of what is going on. We could just get a little bit of weakness here because it's performed so well. It's on a bit of a dip. Let's just sell and then rebuy. There are lots of things that come into play. Basically, option expiry, month end, quarterly end, and this is obviously like this month is clearly like month end, quarterly end, half year end, and year end. So could be a lot of positioning, maneuvering of portfolios. So also on one final note, Finance 1.0 people that have been eating from the cryptocurrency trough and have done pretty well, and now looking to lighten their exposure to risk assets, and obviously particularly the most higher beta risk asset, which is obviously cryptocurrencies. So there is that bit of pressure there as well. But do I think we can still move up in the face of that? Yes, because we still have increasing, we still have more liquidity being provided to the markets on a monthly basis, and we still have zero rates. At this point in my mind, there is only loosening we can go down from. They're accelerating the taper. 3 raise rates next year and the year after, I think is complete BS. We've just got room to basically eliminate those rate rises to actually stop tapering, and then having to speed up the asset thing is as something potentially blow up somewhere, probably in the bond market, because that's usually where these things, where they're over leveraged, where the guys that think they are the smartest play with ridiculous amounts of leverage and like to break things. So something could blow up somewhere, and then yeah, we could end up with lots of liquidity having been pumped back into these markets. But anyway, wow, that is a long video. So remember, none of this is financial advice, guys. Clearly, we are just shooting the breeze. So thanks for listening. Remember, remember, this is not financial advice. I'm not a financial advisor. Clearly, you should all do your own research. Consult your financial advisor if you want to make any investment decisions, especially in Mongoose coin or whatever those coins are that those guys at the in the Senate or whatever deal with. But yeah, thanks for listening, and I shall speak to you guys soon.